Good morning, everyone. Mic check, mic check. What's up? What's up? Hope you guys are doing well. Good morning. Today is March the 16th. It's a Monday today. Sorry, my voice is a little bit sore this morning. I'm still currently not at my home setup, which is unfortunate, but we should make do for today. What's up, everyone? Good morning. Hope you guys are doing well. We have a decent amount of things to kind of talk about coming into this week. Of course, we do have core C. Sorry, I think we do have FOMC later into the week. We have a bunch of red folder news to talk about here as well. As for the overall markets, a little bit of a gap up here in the pre-market, up about 0.9% on the Qs. Nice little gap up here on the SPY as well. We have oil kind of rising in the after hours. So decent amount of things, as I mentioned, to talk about coming to market open after a weekend. What's up, everyone? Good morning. Hope you guys are doing well. Good morning, Marcus, TW, Victor, Andy. Good morning, KO, Hosa, Samuel, B. Roots, Maria. Good morning, Lamit. Good morning, Deuce, Cosmic, Janice, 50. Good morning, Chris, Robert, Martin, Sinna. Good morning, George. Good morning, Deuce. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. I actually met some of you guys on Friday, so that was exciting. We had the Traders Lab meetup, so that was super awesome. That was the reason why we're down here in Texas, but should be back to the normal schedule by tomorrow. Had some kind of flight issues, but we should be all back. Hopefully the stream is good here this morning as well. I am currently on my hotspot and I'm on my mobile setup, but everything should be good here. With that being said, let's get right into the economic calendar, and then we'll head on to the charts to show you guys exactly what we're looking for coming into market open. Okay, let me go on to this. Let me pull this up here as well. Hopefully you guys are able to see my screen. Okay, let's go down into the economic calendar for this week. So as you can see, we had some news kind of over the weekend. The main thing was just kind of more war news that we had. That's been an ongoing issue the past few weeks. So until really the war is fully over, we're going to get this kind of volatility. We're going to get a bunch of news in the overnight session over the weekends. That's going to, of course, impact the market. So until the war is over, that's essentially what we're going to have. As for some red folder news events coming into, this week, what we have primarily is going to be FOMC. This is going to be on Wednesday. I'm not sure why the time zone's all messed up, but it is going to be on Wednesday. I'll have the exact time for you guys tomorrow, but basically it should be at 2 p.m. Eastern Standard Time. I'm not sure why it says it's at 11, but as you can see right here, what we have coming into today is going to be a couple orange folder news events, but the main thing here, of course, is going to be core PPI. That's going to be on Wednesday at 5. Sorry, it should be at 8:30 a.m. Eastern Standard Time. I'm not sure why the the time is messed up, as I mentioned again. And then we have FOMC later into the day, which is going to be at 2 p.m. Eastern Standard Time, along with the press conference that is held at 2:30 p.m. Eastern Standard Time. And on Thursday, we do have unemployment here as well, but that's about it. So this is what we have coming to this week. We do have FOMC statement, which is going to be very key. We'll talk about that a little bit more in the coming days, plus the core PPI that we do have. So that's the major red folder news event, of course, with other news events that we have going on currently. But yeah, that's what we have coming into this week here for the overall markets. Now let's go on to the charts and what we have coming. Yeah, it has to do with the time zone. I'm currently not at my home setup, so it's definitely on the wrong time zone. But let's go on to the charts to show you guys exactly what we have coming into today. Let's first start off on the ES. We'll go into the NQ and then go into the major indices, and then we'll head on to some tech names here as well. So first things first, let's go on to the ES daily time frame. So as you can see here on the daily time frame for the major indices, ES just coming right back down into key levels of support. So until we can break underneath this key level of support, we can't expect buyers just to essentially step in here off our 6600. So coming into today and moving forward here, at least for this week, the levels that we have marked out is going to be our last week's lows. This is our 6600. This is a key level here on the higher time frames as well. And of course, we have another key level that we have marked out, which is essentially our Monday's lows of last week. So you can see buyers are also stepping in off this area here as well. So coming into today, at least for key levels moving forward, if we want to maintain upside, we like to see buyers really step in here off our 6600 for this pushback towards the upside, or now we like to see price above. It's going to be its previous day highs. In this case, it's going to be that 6720 for a potential pushback towards the upside here as well. So these are the scenarios that we do have for some upside. As I mentioned, we are about up 0.9% here on the ES. We're going to have a couple gaps. So right now we do have a couple gaps on the charts, which we'll talk about. But these are the key scenarios for some upside. If we zoom in here and now go on to the lower time frames, if we do want to see some downside, there's a couple scenarios that we have for the ES coming to market open. If it pushes up all the way up in towards our previous day highs, rejects off this level, we can be looking for our previous day high rejection for a potential push down in towards our previous day close. Or now we would more be interested in the break underneath that 6650, which happens to be our previous day close, higher time frame key level here as well for that continued push lower. But obviously with the markets pushing higher, really the only scenario coming into market open for some downside is going to be that rejection here off that previous day highs for a potential reversal trade back towards the downside. So this is what we have for the ES coming into market open. Someone was mentioning how do I draw the levels. I show you guys exactly how I draw my levels. I have a full dedicated video on it on my second channel. So if you join the free daily watch list or that mini free community, it is pinned to the top of the Telegram. I did a live stream a couple months ago showing you guys exactly how I draw the key levels, but they're basically just all old highs plus old lows. But if you do want a more dedicated video, you can watch that. But let's go on to the SPY chart here. As you can see, based off the higher time frames, some of the key levels that we have marked out, of course, is the area that we broke down from. We had another higher time frame key level support here as well, and then all the way back down in towards our 652. So for the SPY coming into market open here today, the key levels that we do have marked out is that previous day lows, which happens to be that 662, along with our last week's lows. As you can see, buyers are stepping in here. And then now we have our previous day highs, 671. So coming into market open, what would I like to see for some upside? If you do want to see some upside here in the markets, right, number one scenario, potential break above our previous day highs, hold for continuation towards the upside. Another possible scenario, if price comes all the way back towards the downside, you can be looking for the previous day lows / previous day close retest, or now we can be waiting for that opening range candle to form to look for that break towards the upside, right, within the first 10 to 15 minutes for a potential push up in towards our previous day highs, since we're closer to the middle of the range. Or you could be looking for that previous day close, that opening range for that push down in towards our previous day close. But really, these are the two main scenarios, with the markets opening up basically inside of its previous day's range. What we have here as well is two gaps on the charts. So if we go on to the regular trading hours, you can see we have a couple gaps. Let's actually go back to this. So coming into today, we're going to have two gaps on the charts. We also had two gaps on the charts yesterday, which was, not yesterday. This was on Friday. We ended up having a gap up, and then we ended up filling the gap towards the downside. We also had another gap down that we created, which ultimately we didn't fill. So coming into this week, we're going to have another gap up, as you can see. And then we also still have this gap that's been unfilled. This was from last week when we ended up gapping down on Thursday, and we end up having this big gap here as well. So coming into this week, if price can push towards the upside, get above our previous day highs, potentially we can see this push up and towards that full gap fill, which would be that 675. Of course, if we do reject off key levels, let's say price pushes up, rejects off our previous day highs, potentially we can fill this gap back towards the downside. In this case, it would be all the way back down in towards that 662. So this is what we have for the SPY coming into market open here today. As I mentioned, those are the key levels that we have marked out. Let's go on to the NQ. NQ, very similar thesis here. This one is a little bit more bullish than the SPY in itself. So that's something to keep in mind if we want to long tech towards the upside. But as for the SPY, as for the NQ, coming into market open, the key levels that I am going to have marked out is going to be our last week's Monday's lows. And then we also have our Friday's highs marked out as well. So coming into market open here today, let's keep an eye out on our previous day highs along with our previous day lows. If we do want to see some upside coming into market open, we need price above our previous day highs for that continued push towards the upside. Another possible scenario, if we kind of reject, potential reclaim later into this session, or of course now if price came all the way back down in towards that previous day lows, you can be looking for some buyers to step in off our previous day close along with our previous day lows, 24,350. This is what we have for the NQ coming into market open here. If we do want to see some downside potential, of course, pop and fade here off our previous day highs is in play for this push back down in towards our previous day lows, along with that previous day close, 24,400. Let's go on to the QQQ here now as well. If we first start off on the daily time frame, currently we still haven't broken outside of this range. So as you can see here for the overall markets, still technically ranging, which is a very key reason why the markets have been more difficult to trade. Because ultimately we're just kind of bouncing from our range low back up and towards our range high, rejecting off key levels of resistance. So until we can break outside this range, we just want to be a little bit more cautious. We do expect a little bit more buyers to step in off the low of the range, which we're currently doing. And now we're just kind of gravitating right back in towards the middle of the range, which happens to be our 604. So really this is the past 20 to 40 sessions. As you can see, the overall market's essentially just consolidating in this very tight range since February, and now we're halfway through March. So basically, we've been inside this range for about a month and a half in between our 596 along with our 616. So until we can break outside this range, we can expect a little bit more, mean reversions, a lot more reversals at key levels, and we could expect less continuation in the overall market. So this is what we have at least on the daily chart. If you go back onto the lower time frames, let's go onto the hourly chart. You zoom out here as well, you can kind of see the overall picture of what's been going on based off the higher time frames. A lot more range here in the overall markets. Of course, some buyers are stepping in off the low of the range, and now we can expect price to really gravitate back up and towards the middle of the range that we do have. So for the Qs coming into market open, let's go on to the exact game plan coming into today. So for the key levels and what we have marked out for the Qs, what we have here is, of course, that previous day highs, which is that 602. If you do want to see some upside, it needs to be above our previous day highs. But of course, with the overall markets having a lot more mean reversions and rejections, I wouldn't be surprised if price came up in towards that previous day highs, rejected, and we can see this reversal back down in the markets, back down in towards our previous day close along with our previous day lows, which happens to be our 594. So at least the two main scenarios today are either going to be longs above our previous day highs or the previous day high rejection. I'd much rather go for more rejections and mean reversions in this market. So keep an eye out on the rejection here off our 603 for potential pushback towards the downside here on the Qs coming into market open. So That's what we have for the SPY and Qs coming into market open along with the ES and NQ. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, appreciate it if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, let me grab some water here and then we'll head on to some other charts. Quick question, you sound bullish. It looks like on the higher time frames you're setting up for a pop and fade. Yeah, it's markets are setting up for a pop and fade. I'm just kind of laying out the scenarios. I'm not neither bullish or bearish. The markets have been mean reversion, a lot more reversals in the overall market. So there's a more likelihood that it will pop and fade since we already have a gap up in the markets. We're gravitating up into a key level of resistance. Majority of the times now, right, it's most likely going to end up rejecting and potential reversal back towards the downside. Until we can break outside the range, as I mentioned on the daily chart, we can expect a lot more reversals and mean reversions in the market. Okay, let's go on to some tech names here. Let's actually go into the SMH first. This one, along with some of the semis and a couple memory names, are holding up. So what I am bullish on is, of course, memory. This one's already back up and towards all-time highs on MU and SNDK. But at least for SMH in itself, higher lows are still being built, as you can see right here. Level of resistance turning into support. So now what I like to see is a potential kind of continue push back towards the upside. If we now go back onto the lower time frames here, for the SMH, the key levels that I do have marked out coming into today is going to be our 396. So as you can see, we do have multiple touches here off our 396. If we can now break above our 396, hold above our 396, we can be looking for this continued push up and towards that 401. So coming into market open here, key levels that we do have marked out is going to be that 396 previous day highs. If we do want to see some of the semiconductors continue towards the upside here, break above, hold for that push up and towards our 400 key psych level and potentially above here on the overall semiconductors. We very much well could reject off this level, so that is something to keep in mind off our previous day highs. So that is still a scenario here as well. If we do reject, we can see a push down in towards our pre-market lows along with that previous day close. And then for the IWM, really not too much to talk about on this one, but based off the daily chart, we did break back underneath key levels, so we basically have to reclaim back above our 250 if we do want to see any sort of continue push back towards the upside. But now let's go on to some of the main tickers that we have coming into market open. First, starting off here on Tesla on the daily time frame. As you can see here, so far we are bouncing off a key level of support. We talked about this level last week. We end up having a nice opportunity off our 390. As you can see, technically we still have not broken above this downtrend. Multiple touches last week, another rejection here off this level. And I can see we're right back down in towards essentially that key level of support, which happened to be our 390. So what we like to see moving forward is one of two scenarios, exact same thing still on the daily chart, break above this downtrend, continuation back towards the upside. If we break underneath, we can see a mean reversion all the way back down in towards that 360. So for Tesla coming into market open here, and the levels that we have coming into this week is going to be number one, our 390, and then we also have our last week's lows, and we can also mark out that previous day lows here as well, 390. So for Tesla coming into market open here, let's now go on to the lower time frames. What I'm going to have marked out is of course going to be that previous day highs, and now let's also mark out that previous day lows. We can mark out this level here as well. So coming to market open for Tesla, if we do want to see some upside, best upside, as I mentioned, above our 400 key psych level for continuation. This, right, with it being in the middle of the range, just be a little bit more cautious right off the bat. Another possible scenario, if it comes all the way back down, fills the gap, you can be looking for the bounce play here off our 390 for that continued push back up and towards our middle of the range and potentially that 398. So for Tesla, right inside the middle of the range coming to market open here, compared to the Qs, which is closer to the top of the range. We just want to be a little bit more cautious on Tesla coming to market open. Of course, if it comes up, rejects, you could be looking for a mean reversion, or now shorts are in play only underneath our previous day lows. Underneath 390, we can see a bigger drop towards the downside. 385 and below here on Tesla. All right, let's go on to some of the semis that we have coming into market open. As for NVIDIA, as you can see, a little bit more consolidation here on the hourly chart as well. So since the beginning of March, we've really just been consolidating in between our 175 along with our 188. So this is the key level that we have marked out currently. As you can see, just a lot of trades and price kind of just right in between equilibrium, which just happens to be our 180. So really not too much to talk about here on NVIDIA. If you do want to see some upside, now what I like to see, minimum above our 188, at least on the higher time frames. On the lower time frames, the key levels that we have marked out 182. So we like to see either bounce play here off our 182 for continuation higher, or of course if price got above our previous day highs or above that 187, we can be looking for continuation towards the upside here on this ticker. But at least coming to market open, keep an eye out on the bounce play off our 182. Sorry, coming into market open. Only downside that I like here on NVIDIA is now going to be underneath that 182 coming to market open for that previous day close, or now you'd be waiting for the break underneath our previous day lows, hold underneath that level for continuation higher. One thing that we do have to keep in mind is that a lot of these on the higher time frames are fairly neutral. They don't really show too much. Right? If you look at the daily chart, there's been a reason why it's been a lot more difficult to trade in the past couple months here. It's just because we've been ranging, right? If you look at this on the daily time frame, we've been ranging for the past really 2 to 3 months here on NVIDIA. So that's why it's been fairly difficult. There hasn't been any trends in the overall markets. Qs has been ranging here as well. So if you're looking at this one, we have a big range followed up by a tighter range here as well in the past 20 to 40 sessions. So with this being in mind, right, if you are trading any of these tickers with no higher time frames, right, either size down in this current market environment, right, look for more mean reversion / reversals, or you're just going to be more cautious and wait, of course, for that higher time frames to break, which is primarily based off the Qs. So this is what we have for NVIDIA. If you look at AMD, another one which has been consolidating a little bit more, we have a couple of gaps on this chart here. But for NVIDIA, for AMD, the key levels that we do have coming into market open, what we have coming into this week is going to be that 190 along with our 197. So these are the levels that we have marked out. If we do want to see some upside coming into this week, what we're going to keep an eye out for is going to be the break above our 197. Hold for that continued push potentially up and towards that previous day highs 200. If we do reject off this level, then we could be looking for a push right back down in towards that previous day close 193 along with our previous day lows. All right, let's go on to a few other tickers here. Apple, really not too much to talk about on these ones, but these ones are just dropping down into key levels of support. So for something like Apple, key levels that we have are marked out, right, 250. Really not too much to talk about. Google kind of dropping here on the daily chart as well, back into key levels of support. So a lot of these tickers with not a clear higher time frame chart, where you're just going to have marked out previous day highs and of course your previous day lows. If you're looking at this from a higher time frame perspective, then you can obviously be on the daily time frame and just keep an eye out for the QQQ. For something like Microsoft, all these charts look fairly similar, right? Microsoft, Apple, Google, these ones dropping towards the downside. In my opinion, these are like good spots for, of course, long term. But at least intraday price action, and we're talking about day trades, it's been a lot more difficult just because there hasn't been too much continuation with the Qs. As for something like Microsoft, right, nice kind of break above, trying to hold above this 402, ultimately breaking underneath. So if we do want to see any sort of upside, break above that 402 is necessary for continuation higher. Besides that, you could be looking for potential pop and fades, or now underneath your previous day lows for continuation towards the downside. As for a few other tickers that we have coming into market open, as for Meta, keep an eye out on the bounce off your key level of support. Pretty nice bounce here. It seems like we had some news in the pre-market as well with NBIS. Key levels that we have marked out is of course going to be our 630 along with our 612, last week's lows here as well. If we do want to see some upside coming into market open, break above, hold above our 630 for potential mean reversion back towards the upside. If we do break underneath our 630, we can see a potential mean reversion back down in towards our previous day lows, which happens to be that 612. So this is what we have for Meta coming into market open here. Be open to playing both sides, as I mentioned. We do have now 2 gaps on Meta, so we'll keep an eye out on Meta coming into market open here. As for a few other tickers that we have, Amazon bouncing off your lows, needs to reclaim back above our previous day highs for any sort of continuation back towards the upside. Underneath our 207, of course, we can see this continue push back towards the downside here as well. So for Amazon, higher time frames, right, needs to get back above our 212 if you do want to see any sort of continuation back towards the upside. And then for Netflix, another one, nice gap up recently. Kind of rejecting off key levels so far. If we do want to see some more upside, needs to reclaim back above key levels. The levels that I have this week here for Netflix is going to be our 95 key psych. If we break above, we can see a mean reversion back up in towards our 98. Of course, if we do reject, we can see a push right back down in towards that previous day lows, which happens to be our 94 here and below. So really coming into market open, we'll keep an eye out on Tesla. We'll head on to some semiconductors here now as well, since these ones, of course, are moving the nicest. MU, SNDK, right? These ones are back at highs. So we'll take a look at these ones here in a second, since memory is leading the markets back higher. But with that being said, if you guys do have any charts or any tickers, I guess I'll go over some for the next 5 to 10 minutes. If you guys are enjoying this so far, appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, let's go on to some more tickers. How do you decide whether to do a 5-minute opening range play or previous day highs? More context based and based off the location on where we're at. Of course, I'd much rather use the previous day highs and previous day lows, but let's say, for example, we are inside the middle of the range, then most likely we're going to be using that opening range on the 5 or the 15-minute time frame. If we're closer to the bottom and top of the ranges, then we'll be using those previous day highs and previous day lows. Scale of 1 to 10 being most difficult, where do you think we stand in this current market? I'm thinking of learning more difficult market. That would be actually great. Exactly. It's always better to learn in a more difficult market, just because it's better to learn how to manage risk in these difficult times, especially if there's no continuation. I'd say it's probably the most difficult market since last year of January, February. We had a little bit of consolidation then, and then we ended up having that drop kind of March, April, nice rebound. The rest of the year was nice and easy with some nice trends on the higher time frames. Now we've just been kind of consolidating for the first, I'd say at least for majority of February, and now kind of the halfway through March. So this has definitely been a lot more difficult if you're trading, right, intraday price action. It depends what setups you're looking for. Of course, if you're a mean reversion trader, it's been a lot easier in this market compared to a continuation trader, which you will definitely have a more difficult time because there's been a lot more mean reversions / reversals. So for MU, as you can see right here, key levels that we have marked out, last week that we marked out was just this key level of support. Ended up having a nice bounce here on MU. Next logical level is really back up and towards our all-time highs. So as you can see for MU now, gapping up here, and now we're back at our, or very close to our all-time highs, which happens to be our 456 here on the higher time frames. If we want to draw this hourly chart, we can mark this down in towards that 452. So coming into market open here on MU, what I would like to see is a push up in towards our all-time highs. Key levels that we have marked out is now going to be that 440 along with our all-time highs here. So if we do want to see some upside, a couple scenarios that we can be looking for, since we did have this pretty big gap up on MU coming into market open. What I would like to see is any sort of dip for a continuation towards the upside. So really first scenario, dip down towards that 438 for that pushback towards the upside. Another possible scenario here, longs are in play here above our pre-market high 446 for a push up in towards our 450 and above here as well. So MU, one of the main names to keep an eye out for coming to market open for a potential scalp towards the upside. Any sort of dip should get bought up and towards our pre-market highs and above coming into market open just based off the higher time frames. So let's keep an eye out on MU today. I'm really not interested in a mean reversion short here on MU just because this one's a lot more bullish compared to the overall market. But if you are looking for a short play, for example, here on MU, you would much rather wait for your all-time highs kind of rejection. So based off of the higher time frames, you like to see kind of come up, reject off your all-time highs, or now underneath our 435 for a pushback towards the downside here as well. Let's go on to SNDK. So SNDK, another name that is fairly bullish here on the daily chart. As you can see, continuation higher, bounced off a key level of support, and now essentially we are back at our all-time highs. So for SNDK, another one along with MU, back at key levels. So the key levels that I have coming into market open here is going to be our 690. We are technically at a key level of resistance. So what I would like to see here on SNDK coming into market open is the reaction that we have off our 688. Other key levels that we have marked out here as well is all the way down and towards that 672. So coming into today, if you do want to see some upside above our 688 for continuation higher, another possible scenario bounce here off our pre-market lows for that continued push back up and towards our 688 here as well, or of course, right, pull back all the way back down in towards that previous day highs, 672 for that continued push back towards the highs. So these are the scenarios that we have for SNDK coming to market open. It very much well could do a potential mean reversion short here as well, which would have to be off our all-time highs. So key levels that we do have is our 690. As you can see, multiple touches here. So for SNDK, if you do want to look for a potential short, right, more of a reversal setup, but you could be looking for this rejection here off your 690, kind of the 700 key psych level for this pushback down in towards that previous day highs, 670. So this is what we have for SNDK. Intel still shaping up nicely here on the daily time frame as well. Nice kind of trend line break last week. Now it looks like we're trying to retest the trend line, and I'd like to see Intel push back towards the upside here. As for a few other tickers, Palantir, let's go on to this name. Key levels that we have for Palantir coming into this week is just going to be our 155 along with that 150. If you do want to see upside now, bounce play here off our 150, of course, longs above that 155. Besides that, you want to be a little bit more cautious because we're inside of this range, potential pop and fade, or now shorts underneath that 150 for continuation lower. As for everything else, right, a couple names. We had some earnings last week on Oracle, kind of mean reversion now all the way back down in towards our area that we broke up from, which was essentially expected on Oracle once it broke underneath key levels. Besides that, for some other names that we can keep an eye out for, Circle still holding up compared to the overall markets. This one has been fairly bullish the past 20 to 40 sessions. So as you can see, this one's kind of holding up nicely. Every single dip so far is being bought up on a name like Circle. Recently had a mini kind of downtrend break here as well. So nice push up in towards our key levels. So just mark out our old highs that we like to see turn into support. As for everything else, HIMS still somewhat holding up here as well. Key levels that we have marked out on this one is our 24 key psych. So we like to see really buyers step in here, right? Higher lows be created for that continued pushback towards the upside. If we can now reclaim back above our previous day highs, potential continued pushback towards the upside on this one. As for everything else, let's just kind of quickly go over some other tickers. Coin shaping up nicely here on the daily time frame as well, along with MSTR. But with Bitcoin bouncing, right, coin in a very key point of interest. We looked at this one on the weekly chart, multiple bounces off our 160. So for coin, the key levels that we do have marked out coming into this week is going to be our 95 that we can mark this out. And as you can see, we do have some sort of mini downtrend forming here in the markets. So for coin, right, a little bit more consolidation last week, break of this trend line. Now we can see this potential continue push back up and towards our 207 here and above, as long as we can now maintain above this key level, which happens to be our 203. So this is what we have for the overall markets coming into today. Just quickly go over kind of gold and silver. I'll take a look at some oil here as well. But for gold, a little bit of reaction kind of off our key levels now. Still technically building up these higher lows in the markets. But if we do want to see any sort of continuation higher, we need to see the reclaim back above. It's going to be this 5150. So as you can see, we are back at a key level of support. We like to see number one, buyer step in here, offer 51. This is our 5,000 key psych. And then of course, we want to see the break above our 5150 for continuation higher here as well. As for silver, similar thing, this one's coming back down into a key level of support here as well, which is essentially the area that we broke out from. So if we do want to see buyers step in, exact essentially level, which is our 76, potential buyers step in, continuation back up and towards our 88 and above here. Okay, so coming into market open here, you can see spine cues pushing up in towards our previous day highs. So that's going to be the key level coming into market open. With the markets gapping up here, we're going to be a little bit more cautious of the potential previous day high rejection. So keep an eye out for, of course, our previous day highs coming into market open here on the major indices. As for some of my main watches coming into today, if we do want to see some more upside, it is of course going to be the memory names MU and SNDK leading the market towards the upside. So we'll keep an eye on these ones for our first pullback long for a push up and towards our pre-market highs and above, which we do have room up and towards our all-time highs. Similar thing as SNDK here. So these ones are the ones that are leading the markets higher. As for everything else, right, Tesla kind of in the middle of the range, but we'll keep an eye out on our previous day highs. Along with that previous day lows, of course. Nvidia, similar kind of thesis here, closer to the middle of the range. So a lot of these tickers not as strong compared to the overall indices. So we're going to basically look for memory that's leading the market higher. And of course, we're going to keep an eye out on the major indices themselves. But yeah, that is most likely going to be it for me today. As you can see, a lot of tech is kind of lagging behind here. So we'll keep an eye out on key levels. Meta is one of the names that is gapping up here. So we'll keep an eye out on actually Meta. One of the main watches coming to market open for your previous day highs hold for a push up and towards our 640, or of course the previous day high rejection. Shorts are in play back underneath our 630 coming into market open here. So this is what we have coming into market open. There's really not too much that I'm looking for besides some memory names. Of course, with the markets just still inside the range, we'll just be waiting for the range break on the higher time frames. Besides that, we're going to be open and playing both sides on the overall markets, and we're going to wait for more news to develop. Main thing this week, of course, is going to be that red folder news that we do have, core PPI along with FOMC later into the week, which is on Wednesday. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. If you guys did enjoy that, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. With that being said, I'll see you guys all tomorrow. All right, take care everyone. Have a great rest of the day. Peace.